2023 is drawing to a close and it's been an eventful year to say the least. Hello and welcome to this special broadcast, Rewind 2023, where we take a look at some of the key milestones this year. It's been a year of big changes for India's banking system. Several stalwarts bid goodbye. Interest rates were sharply in focus as monetary policy authorities around the world embarked on a rate tightening cycle. Lata is here with the year that was for Indian finance.
The standout feature of the Indian financial sector in calendar 2023 is that the very face of Indian banking and finance literally changed in the year. The old stalwarts Deepak Parekh and Keki Mistry exited the scene, handing over their baby, the giant HDFC, to Shashi Jagdishan's HDFC Bank. A younger veteran, Uday Kotak, also handed over the baton at Kotak Bank to Ashok Vaswani. The HDFC merger into HDFC Bank is going to eventually alter equations within the banking sector. The HDFC Bank loan book, which grew from around 16 trillion rupees pre-merger to around 23 trillion rupees post-merger, means SBI's loan book, which used to be double the size of HDFC Bank's loan book, is now only 1.5 times bigger than HDFC Bank's loan book. Literally, the gap between private and public sector banks got a bit narrow. But the change has taken its toll. HDFC Bank and Kotak Bank were the stock market's underperformers of the year, with their shares nearly flat, while a clutch of old private banks like CSB, J&K Bank, Karnataka, and some PSU banks like PNB, Central and Indian Bank rose between 50 and 100%. Indeed, there were mergers and changes in the NBFC space too. The year saw the rise of a consolidated Shriram Group, merging Shriram City Union and Shriram Transport, while Jio Financial emerged on the bourses as a separate listed entity as a Reliance Group NBFC. Its consolidated net worth of 1.14 trillion rupees is likely to make Jio Financial have a seminal impact on the NBFC space, but that may be the theme of 2024. Coming to P&L performance of banks, it was a solid year for banking performance. The banking sector's profit grew by a solid 26% in FY23 to 2.28 trillion rupees, while in the first half of FY24, it did even better, growing its profit by 50% over the previous first half. Public sector banks did the best because of probably their weak base. PSU Bank's profit rose by 62% in full year FY23 and by 66% in the first half of FY24 over the previous first half. Bad loans, they continued to decline rapidly from 5.8% of total assets in FY22 to 3.96% as of March 23 to 3.33% as of September 2023. Likewise, net NPAs have also fallen from 1.7% to 0.97% as of March 23 to 0.78% as of September 2023. Banks continue to improve their margins. Net interest margins, or NIMs as we call them, rose from 2.92% in FY22 to 3.16% FY23, but after rising even further to 3.26% in Q1 of the current year, NIMs fell a bit to 3.21% in the second quarter. The story of falling net interest margins is the consequence of the Reserve Bank's interest rate and liquidity policy this year. The central bank, after raising rates in every single policy from April 22 to April 2023, unexpectedly stopped the hiking cycle, again proving to be ahead of the Fed, which stopped its hikes in July 2023. But an ugly 7.44% inflation in July in India, thanks to tomatoes and some disturbing trends in monsoons, El Nino and all that, led the Reserve Bank to tighten liquidity in the banking system. The Reserve Bank announced an out-of-the-box incremental cash reserve ratio, ICRR as it's called, of 10% on all deposits that banks got from May 29th to July 28. This squeezed out over 1.1 trillion rupees from the interbank market, pushing up the call rates from 6.5% to 6.75%, which in turn pushed up interest rates throughout the industry. The blow fell most cruelly on HDFC Bank, which had raised almost half the deposits of the entire banking sector from May to July to back the loans of HDFC, which was merged into it from July 1. The ICRR was withdrawn, thankfully, in September 8th, but not the tight liquidity stance. Many suspected that the Reserve Bank was seeking to keep Indian short-term rates higher than the US yields, where the 10-year had shot up to 5% in October, triggering fears of a run on emerging market currencies. The Reserve Bank kept the rupee rock solid, stable with massive intervention, but by mid-December, the US yields had waned as the Fed had pivoted. But tight liquidity wasn't the only salvo fired by Reserve Bank. In November, sensing a sharp surge in unsecured loans, like, credit card loans, personal loans, the central bank raised the risk weights to be maintained on such loans, making the loans expensive. Loans from banks to NBFCs also became expensive, but the biggest casualties were the fintechs who specialize in unsecured loans. Banking stocks were not the toast of 2023 like they had been in 2022. Bank Nifty had returned a handsome 21% in calendar 2022 when Nifty had risen by only 4.3%. But Nifty has returned a handsome 17% in 2023. Bank Nifty has been an underperformer with just about 10% gains. And this despite PSU Bank Index giving a 28% rise in 23. The culprits are clearly HDFC Bank and Kotak Bank, both almost flat in 2023 as they struggled with merger in one and leadership transition or uncertainty in another. Will these two banks show mean reversion and emerge from their uncertainties? Will growth, that is both credit growth and bank loan growth, maintain the tempo of 2023? Will Reserve Bank follow the Fed with a dovish pivot at some point and cut rates? Those will be some of the themes of 2024.
Well, Lata, many thanks for joining us. That was the story of the bank and finance sector in 2023. Now, IPOs were the talk of the town this year. Investors have made a beeline to get a slice of the primary market action, but one segment stood out: the small and medium enterprises. Hormuz is here to wrap up the SME IPO frenzy for us. Take a look.
2023 has been the year of IPOs, but today we'll shed the spotlight on a segment where investors have taken the IPO frenzy to another level. I am talking about SMEs. This year has seen close to 60 main board IPOs, but the count on the SME side is a lot more. So far, we have had 164 completed and listed SME IPOs, a number that is 50% higher than 2022 and 3x of what we saw in 2021. Now, why do I say that this has been a frenzied year for the SME IPOs? Here are two examples that prove this point. First, together, these companies have raised a total of 4,425 crore rupees. However, in the process of doing so, they ended up receiving bids worth nearly 3 lakh crore rupees. Another example of that is Chaman Metallics, which was the first SME IPO this year. It planned to raise 24 crore rupees. Instead, it ended up getting bids for almost 5,000 crore rupees. Now that is proper frenzy. Now why is that number significant? Because the amount of bids received by one Chaman Metallics is more than the combined sum raised by all of these 164 IPOs so far. Now Chaman Metallics was subscribed over 200 times, yet it does not feature in the 10 most subscribed SME IPOs of the year. That list includes companies like Kaha Packaging, which was subscribed 730 times, Net Avenue Technologies, which was subscribed over 500 times, and then there was Srivari Spices Foods and Madhusudan Masala, which saw subscription of over 400 times. Of course, one needs to keep in mind here that the IPO sizes are significantly smaller compared to main board issues, and hence the number will appear to be shooting through the roof. But that also does not mean that there is no demand. There is plenty of it. Take a look at this. Accent Microcell was a 78 crore IPO and it ended up getting bids for 19,000 crore rupees. Same is the case for stocks like Srivari Spices. A 9 crore IPO gets bids for nearly 3,000 crore rupees. Now, we spoke to you earlier about these insane subscription figures, but do they translate into strong listing gains? In an ideal case scenario, they should, right? But in some of these stocks, they haven't. Now, stocks like Transway Logistics, Tridya Technologies, High Green Carbon, all of them saw hefty subscription figures, but they listed either at their IPO price itself or even at a discount of as much as 20% to their issue price. Now, even Kaha Packaging, which is the most subscribed SME IPO of the year, is up only 15% from its IPO price. Stocks like Madhusudan Masala, despite the 450 times subscription, is up only 8% from its IPO price. This frenzy, FOMO, whatever you'd like to call it, has resulted in the overall market capitalization of SME listed stocks to cross the 1 lakh crore rupee mark this year. However, there are some risks associated with this too. SME stocks are not widely owned, they are thinly traded, and hence the possibility of manipulating them is much higher than their main board large cap peers. So 2023 has been the year of SME IPOs. They came, they saw, some of them conquered, while some of them left investors with lessons to learn for the future.
Hormuz, many thanks for joining us. Well, 2023 clearly FOMO as far as the SME IPO space was concerned, but not quite for M&A. In fact, 2023 was a year of muted M&A activity, but there was a flurry of block deals with private equity and venture capital exits and promoters bearing stake in many cases. Nisha standing by to wrap up the big block deals this year.
It's been a blockbuster year for deal makers, as it turned out as a year of block deals with M&A activity being quite muted. Over 80 blocks with a total value of over $15 billion changed hands in the year, largest ever seen in the Indian markets. Now, the private equity as well as the venture capital made exits worth around $12 billion, and deals in stocks were spread across the sectors like tech, financial services, industrials, and IT. Now, the biggest, Baring Asia's large exit from Coforge is a game changer, as the investors for the first time saw enough appetite in Indian market to sell out completely. And this has lifted the confidence of the foreign investors. Besides this, blocks are rolling out till the last days of December, like Blackstone's exit from Embassy REIT. Now, even the promoter share sales, they stand out in terms of large blocks like Vedanta and Interglobe Aviation. But investor exits are an emphatic theme for the deal street this year. SoftBank ranks first with close to about $2 billion worth of exits, and Baring Asia's Coforge exit marked the top exit by a PE firm. But bulge bracket PE firms also capitalized on the equity window provided by our markets. Now, what also stands out is that a lot of listed new age companies saw a series of block deals from multiple investors. So Zomato, Paytm, Nykaa, etc. stand out on the list of shares constantly seeing block deals throughout this particular year. Now, in terms of PE investments, let's talk about that. There are some significant deals. Topping the list is Temasek's investment in Manipal Health. Baring Asia made a big bet on HDFC Credila partnering with Chris Cap. And then there are a bunch of other $500 million worth of investments by foreign funds, mostly panning across the healthcare verticals, which stand out as a clear theme for 2023, especially hospitals, a theme which will continue in 2024 as well. While M&A of high intensity has been muted, but there are some significant deals on my list for the year as well, like the Route Mobile transaction in tech space. Nirma buying Glenmark Life Science is a significant deal between two Indian promoter groups. Now, from the conglomerate side, Titan picking Carrot Lane in its shopping cart stands out for the omni-channel theme, which continues even today. And financial services is another space very active on the deal street. AU Small Finance Bank's bet on FinCare Small Finance Bank stands out in this space. So this year, the excitement on the deal street came more from the deals undone, I would say. Cipla's stake sale, a story I broke, caught a lot of attention but is now in cold storage. Another break from me was M&M's investment in RBL Bank, which raised a lot of questions, and the future is keenly watched going forward as well. But the biggest miss for 2023 on the deal street is the 2-year-long saga of the largest media merger between Zee and Sony, which continues in the new year.
Nisha, many thanks. We will, of course, be watching that space closely. Will 2024 turn out to be a year of M&A? 2023 year was clearly the year of block deals. Now, India's image as the pharmacy of the world took a hit in 2023. Cough syrups made in India were linked to the deaths of children in Gambia and Uzbekistan. The government moved to tighten regulations and enhance drug standards. Pharma companies may soon have to appoint a point person to communicate with regulators, and this person will then be held accountable for day-to-day affairs. Ekta Batra joins us now with more on the year that was for Indian pharma.
2023 was a year where the Indian government tested the most amount of drug samples for substandard drugs and launched the maximum amount of prosecutions for manufacturing, sale and distribution of spurious or adulterated drugs in the past 3 years. The clampdown from the government was in response to the issues with poor quality drugs, which first gained prominence in October of 2022 when Made in Pharma's cough syrups were linked to the deaths of 70 children in Gambia, followed by Marion Biotech's cough syrups causing 19 deaths in Uzbekistan within 3 months. Throughout 2023, instances of substandard drugs from Indian manufacturers persisted. Notably, the World Health Organization raised concerns about QP Pharma Chem's contaminated cough syrups in the Marshall Islands and Micronesia. Additionally, Nigeria's regulatory authority flagged Syncare, and the WHO issued an alert regarding a batch of cough syrup cold out from Fort's labs identified in Iraq. A common denominator in these incidents was the presence of unacceptable levels of toxic substances, specifically diethylene glycol and ethylene glycol. However, the problem extended beyond contamination by DEG and EG, with cases of substandard drugs, including eye drops, surfacing in Sri Lanka and the US. Serious allegations were made against companies like Indiana Ophthalmics and Global Pharma. Indiana Ophthalmics steroid eye drops were accused of causing severe eye damage in Sri Lanka, and Global Pharma faced allegations of contamination in their eye drops and ointments for dry eyes in the US, linked to over 50 adverse events, including vision loss and 1 death. In response to these challenges, the Indian government intensified efforts to ensure better drug quality and safeguard the country's reputation as the pharmacy of the world. Measures included investigations, license suspensions for implicated companies as well, and more rigorous and random quality checks for pharmaceutical manufacturers. A significant crackdown revealed over 50 companies manufacturing substandard cough syrups in a substantial move. State and central drug regulators inspected 76 pharma companies nationwide, and the Drug Controller General, in collaboration with the government, revoked licenses of 18 pharmaceutical companies accused of producing substandard drugs. 2023 saw 3.2% of drug samples tested not of standard quality, in line with the previous 3 years, but at 14.4% had the highest number of samples declared spurious or adulterated. The probe saw 262 people arrested on account of it. Lastly, recognizing the need to address drug quality for international exports, the government directed state drug regulators to analyze cough syrups intended for export. The Directorate General of Foreign Trade mandated the testing of cough syrup samples and the production of a certificate of analysis before export, aiming to assure the quality of pharmaceutical products leaving the country.
Ekta, many thanks for joining us. In fact, 2024 will see a lot of these new measures that the Indian government is hoping to roll out come into effect. Now, shifting focus to India's trade ties with the world, the government has been taking steps to sign free trade agreements with its trading partners. Now, India has managed to seal deals with Australia and the United Arab Emirates, while talks with the UK, the European Union and Canada have not reached any conclusion yet. Abhimanyu Sharma gets us a roundup of the trade talks in 2023.
India started 2023 buoyed by 2 mega trade deals with Australia and the UAE that were signed in 2022. it seemed that India had shrugged off its reluctance to trade agreements and was ready to sign new age FTAs. But as 2023 draws to a close, critical negotiations with UK, EU and Canada are yet to be concluded. The FTA talks with UK have been delayed by almost 12 months since the original deadline. Negotiations have spilled over to next year, with the 14th round slotted for January 2024. Both India and UK continue to grapple with complex issues around goods, services and investments. The negotiators are yet to come to an agreement on tariffs on wines and Scotch whisky.
The defining terms we put for the deal is it should be fair, equitable, and it should work both ways. We offered from the current 150%, it can be brought down to 100% now, and over time to 50%, which is the kind of difference in the cost of production between the two countries. And we also said that there should be a mechanism, a minimum import price, which means that the practice of under-invoicing could be stopped. For the equal opportunities, both sides, we have asked for the removal of the maturation condition, which as per the UK laws, for a product to be called whiskey, it has to be matured for 3 years.
Differences remain over tariffs on alcohol, rules of origin and duty concessions for EVs. While India's External Affairs Minister is hopeful of a mutually beneficial landing point, both nations are clear that any deal has to be in national interest.
Agri products, wines, all the agri-processed items, those are sensitive for us, and they are again areas of ambition for both EU and UK. And we'll have to find a way forward that balances our sensitivity with their interests.
India-EU trade talks restarted in 2022 after 9 years of talks, collapsed in 2013 due to differences on customs duties on automobiles, alcohol products and movement of professionals. While there is a strong political intent this time to have an FTA, the European Union has concerns over investment protection and India is concerned about EU's carbon border adjustment mechanism or carbon tax.
Carbon taxes they are proposing to implement, that will be a big issue. We can't have a situation where we sign a trade agreement and then all that gets undone by a 20-25% border tax. The best FTA is between countries which share complementarities, where one country's sensitivities are not areas of ambition for the other country. If you can sign a FTA with Africa, that can be a huge area for mutual benefit and growth.
India-Canada trade talks, which resumed after almost a decade, have been halted after the Canadian government accused India of involvement in the murder of Khalistani separatist Hardeep Singh Nijjar. Trade talks are never easy, and finally, India's leadership will have to take a political call to cross any hurdles with EU and the UK, and any trade deal with Canada looks highly unlikely in the near future. As these complicated talks continue, India is also looking at Latin America to deepen trade ties. But with the BJP getting into election mode next year, it is possible that any trade deal may be postponed till after the general election. In New Delhi, Abhimanyu Sharma.
Well, that's the trade landscape. The FTA is done and the FTA is pending. Hopefully 2024 will see momentum, at least on the FTA that we intend to ink with the UK. With that, it is time for us to wrap up this special broadcast of Rewind 2023, where we bring you the big milestones achieved in the year that was, and more importantly, what to look out for in 2024. From all of us here at CNBC-TV18, here's wishing all of our viewers a very Merry